Hi, my name is Christian Waldegrave, Market Analyst with Teekay, and I'm going to give a review of the LNG shipping market during Q1 2012. What we've seen during the first quarter of this year is that short-term and spot LNG shipping rates have stayed very strong, which is a continuation of the trend that we saw during 2011. And that's really a result of a couple of things. Firstly, we're still seeing very strong demand from Japan for LNG as a result of the Fukushima nuclear crisis, which happened in March 2011. Japanese LNG imports actually increased by 12% last year to 78.5 million tons. And at the present time, actually, only 2 of Japan's 54 nuclear reactors are operational. And so they're still having to buy a lot of LNG for their electricity generation. And that's going to continue through the year because it's going to take time for Japan to bring those reactors back online. And so that's really spurring demand. China as well is another area where we're seeing very strong LNG demand. Imports there were up 30% last year to just over 12 million tons, and we think that that's going to continue through 2012 as well, that we'll get strong demand growth from China, strong demand growth also from places like India, and this ongoing demand from Japan as well. And so that's really creating a strong demand environment for LNG. At the same time, there's very few vessels available to carry out spot and short-term LNG charters, and that's really what's giving a boost to rates. And we're seeing that short-term shipping rates are still around $130,000 to $140,000 per day. And we think that'll continue through the course of 2012. Looking ahead to 2013 and 2014, we now have 63 LNG carriers on the order book, and those vessels mostly deliver through 2013 and 2014. So during those years, as those ships start to come, there isn't actually a lot of new LNG supply coming online in those years. So we might see that those short-term rates start to dip there. Although a lot of it's going to depend on Japan and what happens with its nuclear reactors, as we just touched on. But what we're really excited about is what happens from 2015 onwards, and that's really when the wall of LNG supply comes online, all the projects that are coming in from Australia. We've also got the potential now for US LNG exports, which looks more and more likely that it might happen. And we're going to continue to see demand growth from the developing world, from places like China and India. So we think for the period 2015 onwards, you're going to need a lot more LNG carriers than is currently on order. And so that's positive for LNG shipping, and it's positive for Teekay. What we also see is that as this demand comes online, we're also going to need new solutions for importing LNG. And that means a lot more countries are going to look to floating storage and regasification units as a means of importing LNG relatively quickly and relatively cheaply. So we also think there's going to be a good market for FSRUs going forward, and that's certainly an area that Teekay is going to be looking at. So that's our review of the gas market for the first quarter of 2012, and we'll speak to you again in 3 months' time.